Credit is a powerful tool in today's world. Simply put, credit is the ability to borrow money or access goods and services with the promise to pay later. This can be incredibly useful for big purchases like a house or a car. But credit also lets you handle everyday expenses like groceries or gas. Think of credit as trust. When you use credit, a lender is trusting you to pay them back. They're taking a risk on you. This trust is built on your credit history. Your credit history is like a financial report card. It tells lenders how likely you are to pay back what you borrow. A good credit history opens doors to lower interest rates and better loan terms. But credit is a double-edged sword. It's important to remember that it's not free money. Irresponsible use of credit can lead to debt and serious financial problems. At its core, credit is about borrowing and repayment. When you use a credit card or take out a loan, you're borrowing money. The lender provides funds up front, and you agree to repay with interest. Interest is the cost of borrowing money. It's how lenders make a profit. Your interest rate depends on your credit score and loan type. A higher credit score means a lower interest rate. Repayment is crucial. You promise to repay the principal, interest, and any fees. Repayment history affects your credit score. Late payments can damage your credit. Borrow only what you can repay and make payments on time. When you use credit, you're taking on a significant responsibility. It's not just about signing on the dotted line, it's about acknowledging the obligation you're undertaking. This means understanding the terms of the loan, including the interest rate, repayment schedule, and any potential fees. Before you borrow money, take the time to read the fine print. Don't be afraid to ask questions if something is unclear. Remember, you're entering into a binding agreement, so it's crucial to know exactly what you're agreeing to. Part of accepting responsibility is knowing your limits. Don't borrow more than you can comfortably repay. Overextending yourself financially can lead to missed payments, increased debt, and a downward spiral of financial stress. Section 4. Navigating the world of credit debtors, buyers, and leases. The world of credit involves various players and transactions. Understanding these roles and transactions is key to navigating credit responsibly. A debtor is simply someone who owes money. When you take out a loan or use a credit card, you become a debtor. In a credit transaction, the buyer is the one receiving goods or services in exchange for the promise of future payment. A lease is a contract where you pay to use an asset like a car or an apartment for a specific period. While you don't own the asset, leases often involve credit checks and impact your credit history. Each of these roles comes with specific rights and responsibilities. As a debtor, you have the right to clear terms and conditions, but you also have the responsibility to repay your debt as agreed. As a buyer, you have the right to receive the goods or services you paid for, but you also have the responsibility to make timely payments. Section 5. Sealing the deal. Formalizing your credit agreement. When you enter into a credit agreement, it's crucial to formalize the agreement properly. This typically involves signing a contract that outlines the terms of the loan, including the amount borrowed, interest rate, repayment schedule, and any applicable fees. While the specific requirements may vary depending on the type of credit and the lender, it's generally advisable to have the agreement witnessed and notarized. A notary public serves as an impartial witness, verifying the identities of the parties involved and ensuring that the signatures on the document are genuine. Having two additional witnesses present during the signing process provides further legal protection. It helps prevent disputes over the validity of the agreement and can be especially important if a legal issue arises in the future. Section 6. Your rights as a consumer and taxpayer. As a consumer, you have certain rights when it comes to credit. The Fair Credit Reporting Act, or FCRA, protects your right to accurate credit reporting. You have the right to request your credit report, dispute any errors, and seek recourse if you believe you've been a victim of credit discrimination. It's essential to review your credit report regularly to ensure its accuracy. Errors on your credit report can negatively impact your ability to obtain credit, secure favorable interest rates, or even rent an apartment. As a taxpayer, your interactions with credit can have tax implications. For example, interest paid on certain types of loans, like mortgages, might be tax deductible. It's important to consult with a tax professional to understand the specific implications related to your situation. Understanding your rights and responsibilities as both a consumer and a taxpayer can empower you to make informed decisions about credit and protect your financial well-being.